All right, everybody. So it's March 4th. I didn't get to trade today. I just finished fabricating some new stuff. So today I had an opportunity to go and test all that, and it worked out pretty awesome. So I had to skip out on the trading, but I just want to show what the algorithm did today. I'm trying to show this to you every day if possible, so that if you're thinking about, or following this, you can see daily what the algorithm's doing, and see if that's something that you might be interested in. So here we go. So here's the same portfolio every day. So NUGT, NUG, no trade. Basically, we have to have a switch. So from green to red, switches to short. From red to green, switches to a long play. But I need to have permission, and we don't have permission. So permission takes place when the dashed line is, for a long trade, the dashed line has to be above the solid line, the white line here, and above the red line. So when all three of those things, the dash is above those two things, then we can do a long trade if they're there when the switch happens. On the short side, when the goes from green to red, if the dash is below the white line, like it is here, and below the red line, then I can take the short, but it has to be there when the switch happens. So that's basically it. So the algo is looking back and saying, what's going on with buyers and sellers and flow and share size and all kinds of stuff it's calculating. And when these two things line up, that's the perfect storm of price action and everything else that's going on in the background that makes it a high probability trade that it's either going to go down if it's a short setup or up if it's a long play. So in NUG, we didn't have any opportunities here. So we had the switches, but nothing ever lining up together. So no trade. So then we'll go to CVS. So what I just explained to you is a normal day trading strategy. So I also trade some modified plays based on proven statistical probabilities of success. So on CVS, I trade a switch back. So we have a switch here to the long side, then we switch back. So in this case, it was a loser. Most of the time it's a winner. But in this case, I didn't speed bump it. A speed bump for me is basically it's when I reverse my trade. So basically, I think it's going one direction. It fakes me out. So I reverse my trade and make money go another direction. Or, recover most of my loss or some of my loss. But in this case, I would not have speed bumped this for all my students. Right here, we have an M pattern breakdown. All this stuff you don't need to know, but I know there's people that do technical analysis watching this. And then it broke down. And then right away recovered back up to this resistance level. So the reason why I wouldn't have speed bumped it, and then when I do speed bumps, I do look at some technical analysis, and basically what I look at is resistance levels. So right here we have a pretty strong resistance level. So a speed bump would have taken place right here. I could have speed bumped it and then just made sure I got out by the time I got to resistance and recovered a portion of my loss. Totally could have did that. But I would have needed to make sure that I got out in the resistance zone. And not take any chances. If it broke above here and I got that, I'd be like, oh, I'm going to wait for it to break out. I'm going to make so much money, recover all my loss. But then you get faked out and you lose all your money, right? So a speed bump is just recovering a portion of your loss, so that if you're risking 100 to make 100 and you lost 100, then a speed bump, you recover 25 or 30. That's pretty good. Now you're risking, 0.75 to make, 1. So that improves your overall game at the end of the year. So anyway, CVS, loser. And then I also traded in the simple switch, but we didn't have, we got to switch to the short, but this dash would have had to be below this line like it is here at the switch. And you can see that that's not the case. So no trade. APPS, wrong day. Make sure on the right day. All right, so here's APPS. So here we're red right here, right? And then we switch to green. We switch to a long play. So this is telling us to go long. Then we look down here for permission, and you can follow the white line all the way up. So our dash is above our white line and above our red line, trade. And then we mark it up. That's our target. That's our stop. Got the target, the next candle, winner. So making money. And I risk reward with this strategy the same. So it doesn't matter if this is a 10-cent move or a 50-cent move. I'm only risking $100 per trade, so that at the end of the week, end of the month, end of the year, it works out. If I have 8 winners and 2 losers, I risked 100 for each one of those. It's good. If I had 8 winners and 2 losers, and those losers, was a dollar loser, and my 8 winners were only 20 cents, then at the end of the week, it doesn't matter if I have an 80% win rate, right? I'm still losing all my money. So that's why I don't do my risk based on, how much I want to lose. Like, I don't put it in, like some people are like, on this trade, I'm going to lose $300. On that trade, I'm okay with $100. So no, I try to keep it consistent until it's time to scale up so that it's always the same in every trade. So that's APPS. Okay, then we got TWOU. This stock, if you've been following me, has been biting me. Every time I trade it, I lose. But then when I don't trade it, this thing's doing great. So I think I need to send an alert out to all my students that tell them, I'm not trading TWOU today. So this way everybody else can make some money on it. Because every time I trade this thing, I'm taking a loss, it seems like. And when I don't, it becomes a big winner. So here we go. We're green, switching to the red side. And on TWOU, I traded two ways. I trade the normal strategy I talked about in the beginning, and I traded on the switch back. So we're here, and it has to be, I don't worry about switches that happen pre-market. So we have a switch to the long side, switch back to the short, boom, winner. We're in right there at the close of the candle. We always enter on the close of the candles. So we enter the close, and then we're good to go. So, and this would have been a nice winner. So unfortunately, I didn't trade it. Okay, and the last one on the portfolio is QCOM. So QCOM, I only trade this on the switch. I basically, as soon as it switches, I trade it, and then I speed bump it speed bump it, and then if I have a winner, then I'll continue on until I'm green on the day. So basically, or until after like 12:30, I don't trade anymore. So here we go. We switched green, jump in long right here, which of course I didn't trade this today. You can see over there. So jump in long, and then it didn't go anywhere. I went straight loser. But the question that you would have to ask yourself as my student is, see where this box is inside this tower candle? It's a tower candle because it's a big candle with the box inside of it. Same thing with this one. But all these other ones, see the boxes below it? So indicate on the switch, when the switch happens and the box is inside, it's a tower candle. So these typically like to retrace half or all. So once that retracement happens, you never know what that does to the psychology of the market. That can totally change everything. And then you can see this happen right here. So a lot of times I don't trade tower candles like this. Just skip it. I'll find another trade. But if I did trade it, the way I would trade this is I would have my stop down here, knowing that this could retrace, and I would do my measurement from here to here, and that's what I would do, put in my calculator in the log so I can see how many shares I should buy based on my risk. So, and then, of course, this was a loser, and then definitely going to speed bump it if it breaks below here. Speed bump it 2 bars, right? One, and 2 was the move. And then 1, 2, easily could have recovered all the profit or all the loss and even maybe made some profit on it. So QCOM would have been, could have been a zeroed out trade, could have been profit, could have been a small loss, but it wouldn't have been a big deal. And then I could have jumped back in right here and been in profit. And then if I wanted, I could have hit it one more time right here and made some money. But typically I take QCOM till I'm green, and then that's it. I don't get greedy. I don't keep trading other switches, right? Because like this would have been a flat switch to a loss. So I just green, and then I'm done with QCOM. So there you go. So that's the portfolio. There's a little bit more in the algo. That's how the day shaped up. So tomorrow, Friday, I'm definitely going to try to trade. It's the last day of the week. And I'd like to have a green week this week. So far, we're definitely way green because of our swing trades that have closed. And whoever jumped into that one swing that I just alerted, IWM short, we shorted that at $226. And it is doing awesome right now. So I anticipate we're going to close that trade tomorrow or the next day, and then I'll show you the recap on it. But man, it's just doing awesome. So anyway, so hopefully we'll close out the week green. So tomorrow we'll definitely be trading. All right, everybody. See you tomorrow.